Your plan is perfect. On paper, in theory, in backtests. It has everything. Clear entry criteria, defined exit points, position sizing rules, risk management protocols, everything meticulously planned out. And then you start trading, and the moment something uncomfortable happens, you abandon it. That's when your plan dies. Not because it was flawed, but because you broke your own rules. Here's the truth that destroys more trading accounts than anything else. The best plan in the world fails the moment you ignore it. And worst plan executed perfectly beats perfect plan executed inconsistently. Every single time. The plan versus execution gap. Let me show you exactly how this works. You've spent weeks developing your trading plan. You've back-tested it rigorously. It shows a 65% win rate with 2-1 reward to risk. The math works. The edge is there. You're confident. Then you start trading with real money. Your first 3 trades lose. Statistically normal. With a 65% win rate, losing 3 in a row happens about 3% of the time. But your emotional brain doesn't think statistically, it thinks in fear. Your perfect plan said to risk 1% per trade. After the 3rd loss, you have doubt. Your next trade appears. Your plan says trade it, but you're scared. So you risk 0.5% instead. It wins. Relief. Now you're overconfident. The next trade appears. You want to make back your losses fast, so you risk 2% instead of 1%. It loses. Now you're down more than if you just followed the plan. This one deviation from your plan didn't just cost money, it changed everything. Because now doubt's creeping in. Maybe the plan doesn't work. Maybe you're not cut out for this. More trades come. You start taking trades outside your plan. It's close to my setup, it's good enough. You're no longer following your plan. You're gambling with a vague idea of a plan. Your 65% win rate plan? Worthless now. Because you're not executing the plan, you're executing emotions. The gap between your plan and your execution is where fortunes are lost. The rule-breaking cascade. Here's how rule-breaking spreads. You break one rule, it feels uncomfortable but necessary. You move your stop loss on a losing trade to give it more room. I know this will turn around, I'll give it 10 more pips. Sometimes the market does turn around. You feel vindicated. Breaking the rule worked. Now your brain records this. Breaking the rule sometimes works, so breaking it more should work better. You start breaking more rules. You move stops regularly. You skip your stop loss entirely some days. You take trades outside your system. You risk more than planned. Each break is smaller than the last. It doesn't feel like a big deal, but it is. Because you're training your brain that rules are optional. And optional rules aren't rules. They're suggestions. Once your rules become suggestions, your plan is dead. And once your plan is dead, the market eats you alive. The losing trader's logic. Let me trace the exact thinking of traders who ignore their rules. It starts with one small break. Just this once, I'll risk 2% instead of 1%. Seems reasonable, especially if you're confident. But what's confidence in trading? It's ego. You feel special. You feel you understand the market today. You feel you can make this break work. Everyone who's blown up an account had confidence right before they did. The next step is rationalization. The trade loses and costs you double, but you tell yourself, that was just unlucky. I had a good reason. You're now accepting losses from rule breaking, which means you'll do it again. The next step is pattern formation. You've broken this rule 3 times. 2 worked, 1 lost. Your brain sees pattern success. Breaking this rule works 66% of the time. I should keep doing it. But 66% is probably just luck. Your original plan had a 65% win rate specifically because you followed all the rules. Now you're 66% on trades where you broke rules? That's probably coincidence, not edge. But your mind doesn't see it that way. The final step is plan abandonment. You've broken enough rules in enough different ways that you no longer follow your plan at all. You're trading on gut feel. You're making it up as you go. You're gambling. And your account reflects this. The trader who once had a solid plan is now a chaos trader. And chaos traders lose. The illusion of being special. Here's the lie every rule breaker tells themselves. Everyone else follows rules, but I'm smarter. I can adapt in real time. I can break rules and still profit because I understand the market better. This is delusion. This is ego, and the market has no mercy for ego. The best traders in the world follow their rules religiously. They don't break them for special situations. They don't break them because they're feeling good. They don't break them because they think they know better. They follow them consistently. And this consistency is what builds edge. Edge isn't some magical thing. It's the reliability of your system. And you can't have reliability if you're constantly changing your rules. The traders who think they're special enough to break rules, they're the ones who end up broke. The traders who follow their rules exactly, they're the ones who end up rich. The cost of one broken rule. Let me show you the financial impact of breaking one rule. Your plan says risk 1% per trade. You risk 2% on a trade you feel good about. It loses. That's minus 2% instead of minus 1%. You need 2x winning trades now just to get back to break even from that trade. You risk 3% on a trade you're extra confident about. It loses. That's minus 3%. Now you need 3x winning trades to recover. You skip your stop loss entirely on a trade you know will work. You lose, minus 10%. Now you need 10x winning trades to recover. You've just turned a few rule breaks into a hole you can't climb out of. The math is brutal. One minus 10% loss erases 5 plus 2% wins. And 5 plus 2% wins are meaningful progress, but one rule break killed it. This is why professional traders don't break rules. They understand the math. They know that each break has a multiplicative negative effect. They know that plan adherence is wealth creation. They know that breaking rules is wealth destruction, so they don't do it. Ever. The when and why traders break their rules. Let me identify the exact moments when traders break their rules. First, after losses. You take a loss. It hurts. You want to make it back, so you risk more on the next trade. I'll get it back in one trade. This breaks your risk management rule. The next loss is bigger, and the downward spiral begins. Second, after wins. You win big. You feel good. You feel skilled, so you risk more on the next trade. I'm on a hot streak. I can handle bigger risk. This breaks your rule and usually ends badly. Third, in isolation. You're alone at your computer. Nobody's watching, so you take one extra trade. Just one. It breaks your rule about number of trades per day. But who would know? This is how secrecy enables rule breaking. Fourth, when bored. Nothing's happening. Markets are quiet. Your setup hasn't appeared, but you're bored, so you force a trade. It breaks your setup criteria rule. The trade loses because it wasn't actually your setup. Fifth, when desperate. You need the money. Your account is low. You need profits right now. So you take excessive risk. You force trades. You break multiple rules at once. Desperation is the enemy of rule following. It's also the enemy of profitability.
How to build unbreakable rules. So if breaking rules is destroying your trading, how do you make them unbreakable? First, write them down in detail, not vague ideas. Specific instructions. I will risk exactly 1% per trade, no more, no less, no exceptions. This is written in my operating manual. When your rules are written concretely, breaking them feels more serious. You're not just thinking differently, you're violating a written commitment. Second, make rules objective, not subjective. Bad. I'll exit when I feel the trade is done. Good. I'll exit when price hits my target or my stop loss, whichever comes first. Objective rules have no gray area. You either violated them or you didn't. There's no room for interpretation. Third, remove decisions from the heat of the moment. Set your stops and targets when you're calm, not when you're trading. Use automated orders. You can't break a rule if the order executes automatically. Fourth, create accountability. Trade with a partner. Share your plan. Tell them you'll follow it. When you know someone else is watching, you're less likely to break rules. Fifth, journal every rule break. Every time you deviate, write it down. I moved my stop loss today. This violation cost me $200 I didn't need to lose. When you see the financial cost on paper, rule breaking becomes real. It's not abstract, it's money. Sixth, understand the why of your rules. Each rule exists for a reason. Your risk management rule prevents account destruction. Your entry rule ensures you're taking high probability setups. Your exit rule locks in profits or limits losses. When you understand why each rule exists, breaking it feels like self-sabotage, because it is. The uncomfortable truth. Here's the truth that separates winners from losers. Your plan doesn't matter. Your rules don't matter. Your system doesn't matter. What matters is whether you'll follow them when it's uncomfortable, when you're scared, when you're greedy, when you're desperate, when you're bored. When the market tests you, that's when your rules matter, not when everything is comfortable and easy. The traders who follow their rules when it's hardest are the traders who succeed. The traders who break their rules when it's hardest are the traders who fail. It's that simple and that brutal. Most traders would rather have a mediocre plan that they follow perfectly than a perfect plan that they follow inconsistently. Because consistency is what matters, not perfection. A mediocre plan executed perfectly beats a perfect plan executed inconsistently, always. The cost of inconsistency. Let me show you the cost. Trader A has a good plan. They follow it 95% of the time. They break rules when they're emotional. Over 5 years, they're up 240% because their system works most of the time. Trader B has the exact same system, but they follow it 70% of the time. They break rules frequently. Over 5 years, they're down 15% because their inconsistency destroyed their edge. Same system, completely different outcomes. The difference? Rule adherence. This is why traders who focus on discipline beat traders who focus on strategy. Strategy matters. Discipline matters more. The commitment required. To stop breaking your rules, you need to make a commitment, not a vague intention, a real commitment to yourself. I will follow my plan exactly as written. No exceptions. I don't care if I'm scared. I don't care if I'm desperate. I don't care if I think I know better. I will follow my plan. This commitment needs to be ironclad because your emotions will test it. The market will test it. Every time you want to break a rule, your commitment will be the only thing that stops you. Here's your challenge. Write your trading rules down, not vague ideas, specific, measurable, written instructions. Then commit to following them exactly for the next 100 trades. No breaks, no exceptions, no special circumstances, just perfect adherence. Then review your results. I guarantee they'll be better than when you are breaking rules. Because your plan only works when you follow it. Your rules only have power when you honor them. Your system only produces results when you execute it. So stop breaking your rules, start following your plan, and watch what happens.